You're watching Closing Bell with me, Lavisha Darad, and the color continues to be red for the Lal Street, given that the West Asia conflict, it's not seeing any respite as of now. But yes, we've seen that US President Donald Trump has said that he will be prepared to talk and resolve the conflict, but he's also added the fact that the 4-week military operation could be possible against Iran. Iran too has retaliated and said that they will be not negotiating at the current juncture. But yes, as of now, around 3 tankers have been bombed along the Strait of Hormuz. Iranian officials have already warned that no ships will be passed through the route, and that is why the street sentiment has been well capturing all of these news developments that has been happening. If you look at the Sensex and Nifty levels, Sensex expert of the show who's joining us to at least decode what the market sentiment looks like. Joining me is Ajit Mishra of Religare Broking. Ajit, earlier we were talking to Surbhi about the same, about how the geopolitical tensions have been unfolding and how the market reaction has been. I mean, considering the drop that we have seen today on the index level, do you think that if in case the war actually goes and further there's an escalation from here on, do you think that Nifty could actually test 24,000 levels?
Yeah, good afternoon, Lavisha. So, Lavisha, I was hearing your conversation with Surbi, and the first thing that comes across, especially when it comes to the area where we are seeing this situation. So, when it comes to Middle East, everybody consider about the oil prices. So, oil prices, if you see that from around $40 to $58 is something that we've seen a decline, and now we were seeing that it's been almost a couple of quarters we were hovering in this 70-75 band. After this event unfolded, we are seeing that again we are inching towards 80 plus soon. So that definitely is a big concern for markets like us who are largely dependent on crude imports. And but at the same time, when it comes to the market positioning, Lavisha, the gap that we had post the US-India trade deal, we have had discussions around this that eventually such kind of gaps usually get filled. Friday we had kind of an indication, though it could be multiple reasons, means Nifty slipped below the long-term averages, it was MSCI rebalancing, but somehow it was kind of a precursor that something is going to happen. And today we have not only filled that gap, but we have also retested the February month low close to around 24,570, 580 area. So we are testing that zone for third time now in the last 5-6 months. And in case if Nifty fails to hold this area, then probably yes, 24,400, 24,200, 24,000, all these levels are possible. So as of now, 24,600 is something that we believe is going to be a critical zone to watch out for. And to stabilize the market, we need to reclaim 25,200, 300 decisively.
Okay, got it. Ajit, let's talk about quickly about some individual movers of the day. L&T, clearly it's one of the day's biggest casualty, given that the company's international order book is hugely exposed to the Saudi Arabia, UAE regions. Now, given that the stock already saw quite a good February month, do you think that March is just the beginning of the consolidation phase for L&T?
In fact, I feel otherwise. Means, Lavisha, it was almost like 1.5 year of consolidation which recently ended, and we are again re-entering into this consolidation zone. Means we have retested the neckline area, we have penetrated the same, in fact, in today's trade. So it seems like more of further consolidation with a positive bias. So it's not that outrightly we have seen the tone completely shifting from positive to negative. So yes, there could be more of consolidation, time-wise correction in the stock, but a zone closer to around 3850, 3900, we have multiple supports to look at. So in case somebody is looking for a long-term perspective, they can start accumulating even at current levels.
Got it. All right, Ajit, let's also talk about the crude sensitive, since in the past 3 days we have seen that Brent has already risen by about 10 to 12%, and it spells trouble for OMC, paint and tire stocks, and that's well reflected in today's stock movement as well. For you, any of these crude sensitives look attractive from a near-term or a medium-term perspective?
Tire stocks, they were doing well. In fact, we were seeing that JK Tires was quoting at the record highs, a couple of weeks ago, and now we are seeing a bit of a profit taking. But overall trend looks positive to us. Paint definitely looks weak. Means if you see that Asian Paint after this attempt of recovery and then this consolidation range breakdown, this indicates a possibility of further decline towards 2200 and be lower. So paint counter is definitely something that you should avoid. Tire counter selectively one can look for accumulation.
Okay, got it, got it. All right, on the flip side, but we have seen a good rally that has come in upstream oil explorers. For instance, ONGC has been doing well. Oil India has also relatively fared well because of the higher crude prices benefiting their top line. Ajit, how do you see all of these from a technical angle, ONGC, Oil India?
Oil India definitely looks very promising. Means after almost like 1 year of consolidation, we are finally seeing that the stock has stabilized around 450 area after forming a base around that zone, and we are gradually seeing recovery also. And indications are in the favor that in the near term, 520, 540 is something that the stock might test. So even at current levels, it looks okay to accumulate with 405 as a closing stop loss for Oil India.
Okay, all right. That's the view for Oil India as well. Ajit, just one last question before we let you go. Any top picks you want to highlight at this particular market meltdown that we are seeing at the current juncture?
Yeah, so Lavisha, within the defense space, BEL is one of the consistent name, means the stock is still holding around this record high, irrespective of what we are seeing in the market scenario. It's maintaining the positive tone while holding above the short-term averages. So this gives us comfort that once the market stabilizes, we are set for the next leg of the up move also. So here one can look for fresh long position even at current levels, and your stop should be at 442. 474 is what we are eyeing as a target. And like what we've shared about paint counters, still looking wobbly. Asian Paint can be considered for fresh shorting even at current levels after this decline. The 2200 is the near-term target, so with stop at 2380, one can go short in Asian Paints.
Okay, all right. That's the word coming in, and those are the top picks. All right, with that, we have to let you go, Ajit, but thank you so much for your time and joining us.
Thank you.
All right, let's quickly address how the rates have fared for today's market. If you look at the close, Sensex is down by about 1,000 points. Nifty is also down by about 300 points. Below that, 24,900 odd levels. Of course, we've seen a bit of recovery from the day's low. But yes, Nifty has extended the loss to about the second consecutive day. Of course, it's a risk-off sentiment, not just for our own markets, but of course, the global markets have also been reeling under pressure, given how the Mid-East conflict has been faring at this current point. But India Wix has seen quite a bit of a jump, 23% gains coming in from this edition of Closing Bell. Markets clearly on a panic mode today, and we'll get you all the developments which is happening today and tomorrow on the geopolitical front as well. But we'll meet you now on Wednesday. Until then, do have a happy Holi and stay tuned to moneycontrol.com.